Good evening, everyone. On behalf of KR Choksey Shares and Securities Private Limited, we welcome you all to the Q3FY18 earnings conference call of Infibeam Incorporation Ltd. I take this opportunity to welcome the management of Infibeam Incorporation Ltd, represented by Mr. Vishal Mehta, Managing Director, and Mr. Hiren Padhya, Chief Financial Officer of the company. We also have on the call Mr. Vishwas Patel, the CEO and founder of Avenues India. We'll now begin the call with the brief overview of the company by the management, followed by the question and answer session. I now hand over the floor to Mr. Vishal Mehta for his opening remarks. Over to you, sir.
Thank you, and good evening to everyone. On behalf of the management of Infibeam, welcome to our third quarter FY 2018 earnings call. I may not have had a chance to wish you all a happy new year, so please accept Infibeam's wishes to all of you for a very happy and prosperous 2018. On February 14th, our board of directors adopted the results for the third quarter FY 2018. The results have been uploaded along with the press release and earnings presentations on the stock exchanges and also on our website. I trust you all had a chance to go through the same. We are very happy to announce that our board of directors has approved to pay an interim dividend of 10% to our shareholders. We've also gotten an approval for the proposal of Network 18 Group to invest up to 40 crores in Infibeam, and also to appoint Mr. Vishwas Patel, who is on the call with us, as well as Dr. Piyush Kumar Sinha from IIM Ahmedabad as directors on the board of Infibeam. I will discuss the details of these in a while as we go ahead with the presentation. In our agenda today, we will discuss the following. First, what will drive Infibeam as an e-commerce enabler? We will discuss about the strong scalable business model and growth prospects by using some analogies from the industry vertical that we operate in, that is the internet industry. Second, we will then take you through some business developments. We will share business updates that will help Infibeam grow faster and also make profits. I will also subsequently share some of our growth plans. Hiren will walk you through the financials and how our strategy reads by the numbers. And then I will summarize some of the key strengths and future potential that we hold. Finally, we will open the floor for Q&A. I'm on slide number 5. I think it's very important to understand the business and the progression path before we delve into numbers. While Hiren will walk you through the numbers, I wanted to walk you through the business model and also our thesis around why this business model is extremely scalable for us. You see, we've got a lot of names on slide 5 of companies that you may recognize. Infibeam is an e-commerce enabler. We provide technology by leveraging the power of the internet. Just to put you into perspective, there are numbers out there about 5 billion internet users worldwide, amongst the population of 7.6, which means the majority of the people in the world, they use internet, and there are more than 2 billion smartphones. And basically, wherever consumption happens, that's where transactions should also happen. And hence, building out internet platforms to do e-commerce for selling of goods and services and also enabling it through digital payments is an extremely important part of a platform. I will come to you in a moment to the internet platforms that others do, but basically what I wanted to show on this slide is that what Infibeam has been doing so far among so many years with the focus is to provide a platform for all these millions of users, not just in India but also overseas, to be able to transact online. There are two broad business models, in our opinion, that has emerged. If you walk to slide 6, you will find several other names as well in the industry, very, very well-known names. You see, the first business model, and in terms of a visual, is a television model whereby you essentially create a pipe to get the content to the user. And over a period of time, you will notice that platforms have emerged like YouTube, which actually go and provide more than just a pipe. There is content ingestion frameworks. There is an engagement model. There is a model for consumption. There are models for revenue recognitions, which are ad supported and many others. And so platforms do just more than pipes. And I'll walk you through what I mean in detail. If you look at how most of the companies, on the slide 6 have evolved, you will see that there is e-commerce services platforms, there are payment platforms, there are social media platforms, there are many utilities. For each and every aspect of this platform, there is also a different pipe model that I call the traditional non-e-commerce model. So over a period of time, given that these billions of users and consumption has moved online, that platform becomes a very important facet of how companies have evolved as well, which requires a lot of effort to get it right. It requires huge amounts of time and effort to be able to get the positioning and the proposition carefully crafted. But the moment it actually gets crafted, it allows you to grow not just linearly, but exponentially. Many companies, they provide very scalable services. It mostly starts from the fact that some user or a merchant or a customer wants to transact, and the company will build out a platform and a framework that allows this consumption to be built at scale. If you look at how internet companies have grown in recent times, you will find that there are different business models that have emerged. And amongst this business model, I wanted to specifically talk about Infibeam as a business model as I walk you through slide 7. You see, Infibeam as a business model, we used to have a subscription-based model, a subscription whereby we will cap our upside. So the more our users and our customers in a B2B model, as in merchant adopting our platform, the more business merchant does, we did not get an upside. And that was a very defensive model. I think it was a great value proposition a couple of years back, because a lot has evolved in this internet age that allows you to manage your cost much better. And it also allows you to scale up. But the dimension of scale was more geared towards addition of more and more merchants. And that subscription business was a great opportunity for the company to build up a very defensible product. But over a period of time, what we realized was that as our users and our customers and our merchants, they did better, and the harder we hit, we were not additionally getting more revenues. In other words, we kept on building out more and more feature sets, more and more important customizations, but that limited our upside, given that it was subscription. To give you an example, if one of our merchants, they ended up doing a few lakh rupees of transactions, and if they increased the number of transactions, that the company did not get additional money for it. Now, over a period of time, what we realized was that as the internet economy grows and as transactions grow, that if we actually make our model more transactional in nature, that the company and our shareholders will get a lot larger returns. So in the past few quarters, the company has consciously focused on building out and providing our same infrastructure along with payments to make the model more transactional in nature. And I'm very happy to say that majority of our revenues are transactional in nature now. So if you look at our model, and I want to walk you through slide number 7, Build-A-Bazaar has many of these merchants. And that was the model that we started out with, where we used to actually make revenues out of subscriptions. And we used to get some revenues out of transactions. There are many of the initiatives that we have undertaken, because with payments, essentially more transaction means more revenue for the company. And the addition of payments was a big step towards making the model more transactional. You see, the software and the payments framework together not only just creates stickiness, but it also allows the company to generate more revenues and make money out of every single transaction. So if you look at CC Avenue, on a run rate basis, for FY18, the company is on track to process $3 billion of transactions. And mind you, on every transaction, that the company generates some amount of revenue for the shareholders. In terms of the total number of transactions, we are one of the very few companies that generate more than 100 million transactions a year. Now, it's very important to note over here that these transactions are not just processed transactions, these are successful transactions. While the industry is full of numbers that talk about how many are processed and not how many are successfully processed, the company has taken the choice of reporting only numbers which are successfully processed and ones where we actually make, because we do not have a philosophy or a appetite to make losses on transactions. But what we have done is that on every transaction that we would want to make some profit. So we've taken that approach, and that has allowed us to scale. There are more than 240 payment options, including UPI and RuPay, which are integrated. I wanted to talk about government e-marketplace, and I will also talk slightly more in detail about this. But this particular framework has been provided to the Indian government, and all central government procurement has the potential of coming on to government e-marketplace. In here also, rather than positioning the framework and allowing it to be subscription driven, where more transactions get processed that the company still gets the same amount of money, we decided to position this and communicate this as a transactional framework. So in other words, more value of goods get processed onto the GEM platform, the more money the company gets. I'm very happy to report that we have started generating revenues out of GEM as of last quarter, as in Q3 of FY18. And going forward, we will be covering that slightly more in detail. I want to also cover Bill Avenue, and I will allow Vishwas subsequently to cover more in detail. Bill Avenue is this amazing service that has been launched, which allows us to get a slight share in the utility payment space. You see, there are thousands of utilities, and government has created a framework called Bharat Bill Pay, which there is a licensing to. And in one way, the company has created a framework where there are a set of agents who collect utility payments. The way you think of agents are the people who are there outside of a railway station or a kirana store. And if they are able to collect payments, and then on the other side, there are a set of utilities. Utilities could be water, electricity, whatever you call. It could be local utilities as well. And these utilities are on a common framework or a pipe. And in one case, whenever the agent collects, not only does the agent earn some commission, but the company gets revenues. To give you the scale and size of this opportunity, there are about close to 9 crore bills that get processed or created every day. And earning a few rupees out of every bill, which we will walk you through, is also a tremendous opportunity for the company. Again, it is transactional revenue. The more the company transacts, the more revenues we generate. So what I want you to take away from this slide is that we would want to earn revenues out of every transaction, which is a significant opportunity to scale up the company. Next, I would like you to understand GEM slightly better from us. There are a lot of information about government e-marketplace, and we would like you to understand the business development opportunities and updates from the company. Government e-marketplace is where there is already usage-based e-commerce going on. Government purchases lakhs of crores of goods and services every year, and GEM is the potential of bringing that entire consumption online. We've decided that usage-based commerce is a very important facet of what the company needs to walk through. It is not a discovery engine. There is usage that goes on, and that usage can potentially go online. You see, in the past, we have made some significant announcement, material developments, where we have announced that we will bring Amul as a product framework online. We have also announced Adani and Fortune Wilmar, those products online. Those products typically don't need to get discovered. A lot of people know about this product. There is an offline consumption going on. If there is an offline consumption going on, is there a potential of bringing that entire framework online? Unlike a Google framework that allows discovery of products, a usage-based framework allows you to bring the entire consumption portfolio online, which is where our core competency lies. So Government e-Marketplace is an opportunity to bring that entire consumption of the government online. We had talked about this in the previous call, where we said that government has a total procurement opportunity of $100 billion. You see, across the entire industry, even today, when you talk about companies as large as Amazon, the revenues are not as large as this potential, if you will. So this has the potential to become one of the largest marketplaces in the country. Of course, that will mean that the consumption and the entire procurement of the government would eventually go online. I want to walk you through some statistics of Government e-Marketplace which have been publicly published under the URL gem.gov.in. We're very happy to report that the entire e-commerce framework of GEM is on Infibeam's framework, which means that Infibeam Web Services framework powers government procurement. The total value of procurements are estimated to be between 6 to 7 lakh crores. It's about $100 billion. And it's also public information that even state governments have signed up to do local state procurement using GEM. So not only is the central government procurement moving to GEM, even state governments have signed up to utilize GEM. There are product stats. There are already close to 500,000 products on GEM. These are for businesses who want to provide these products to the government. So the same process of offline is replicated on the online GEM framework for government to procure. Mind you, this is not an open marketplace. This is a closed B2G marketplace for the government. It's very interesting to note that even services, which means that whether the government wants to purchase a service related to a product or a service in general, that is also consumption is moving onto GEM. There are more than 8,800 services that have migrated to GEM. If you look at the number of orders and the value, there is more than 4,000 crores of procurement which has already been flushed through GEM to date. And mind you, this has happened in a period of about 4 months. So there is a potential to actually grow out. While the ceiling is very high, but GEM 3.0 was recently launched in the month of January. If you look at sellers, there are 73,000 odd sellers that have already onboarded on GEM. And if you look at the number of buyers, and buyers meaning government organizations who have empaneled to purchase products and services, more than 16,000 have already signed up to procure. So it's a fantastic opportunity for the company to be part of an opportunity to power a marketplace that has the potential of becoming one of the largest in the country. Now I would like to hand over the call to Vishwas Patel. He will walk you through the payments business updates and the potential thereof. Vishwas, over to you.
Thank you, Vishal. Brief introduction. I am Vishwas Patel, currently CEO of CC Avenue. Brief description about CC Avenue Payment Gateway. We are India's first independent third-party aggregator providing payment gateway services started in the year 2000-2001. We have the maximum number of payment options where we have tied up with 54 plus Indian banks where we are deeply integrated into their core banking solutions. Today we have the highest number of merchants on our platform, and if I were to if I were to go on to slide number 10, this last 12 months we have processed 100 plus million successful payment transactions. As Vishal said earlier, we are talking about successful transactions and not processed transactions. Majority of the top performing merchants are processing through us. So you name anybody in the Indian internet industry, say if you take travel as a use case, then if you look at say hospitality, then Taj Hotels, Oberoi Hotels, ITC, and Lemon Tree, all the main chains process payments to us, be it on the OTA space, Make My Trip, Clear Trip, Yatra. So most of the 92 of the top 100 merchants process through us. Including now IRCTC, Odisha Government Tax Collection, Bharat Gas, Hindustan Petroleum, Fastech. So many other new merchants also, since we become the default payment gateway providers in the there, mainly because of our huge experience, our customized solutions and other things. So going ahead with the merchant MDR, now government has made debit card MDR to 0. So it will lead to an exponential growth. So today, card transactions for the end merchants, specifically in the SME section, so if they accept cash on 100 rupee transaction, they get 100. So now, which debit card rates also dropping to 0, and government taking on the burden of reimbursing us payment gateway aggregators. So we expect the usage and the future growth of payments going up even more further. So it's going to keep continuously growing. We expect almost, I think it will grow exponentially, because for the end merchant it is right now accepting debit card is going to be 0. Going on to the other platform which we are very kicked about is the Bill Avenue that we launched 2 or 3 months back. Now, bill payments as a utility, currently it was all fragmented. The government in its wisdom via RBI has conceptualized Bharat Bill Pay. So every utility, be it in electricity, if you see on slide number 11, electricity, water, municipality, gas, telephone, DTH, then slowly education, school fees, college fees and others, and insurance, mutual funds. So all kind of billing items that are going to be there are going to be coming onto a common standard, into a common switch or a system called Bharat Bill Payment System, which is conceptualized by NPCI, which has earlier made the India's card system RuPay and amongst other things. So under NPCI, we have been appointed as a operating unit where RBI has licensed us. So there are only 8 private guys who have got this biller operating unit licenses from RBI, and rest all are banks. So to qualify for Bharat biller this thing, it requires 5 years of bill payment experience and 100 crore net worth. So within this thing now, since you have got the license, we have onboarded in the span of less than 90 days almost 500,000 agents across the country via and agent institutions, also big agent institutions like Suvidha, Money on Mobile, Homes, iCash unit and other things. So with this, what happens is that it gives us the ability to go to the billers and put their bills onto the NPCI systems. And on every transactions happening, we earn a flat fee out of it. And on the other side, we have appointed agents where any bill payments done at any of the agent outlets anywhere in the country, in our agents which are subscribed, we earn a flat fee out of it. So it's going to be this utility payments is. If you see on slide number 12, move to slide number 12, utility payments, unlike shopping, is something that is very compulsory. You have to pay up. So we are very kicked because once all the billers come onto a common network, and anybody from anywhere in the country can pay any bill across any utilities across the country, that kind of power and that kind of bill payments is going to become a recurring phenomenon. And since we are well placed there, that way I think we expect a lot of growth on that. So if you see today, our network includes lakhs of agents registered across India. There are over a dozen billers already put up on the system, like a Dish TV or a Gurgaon Municipal Corporation and Baroda Gas, Sabarmati Gas. So any of these bills paid anywhere across the country or any bank platform, there is a revenue to be made on bill avenue by us. And if you look at the agent also, 500,000 agent network already done. And if you move to slide number 13, I just want to give you a scope of how many bills that are generated across the country today. So today, if you see on the bills part, this year alone, every day 1.2 crore bills are generated across the country. And if you see from if you annualize it, 4,200 crore bills are generated in a year. And there's going to be a significant growth, going up to almost 9,340 crore bills a year generated by 2019. Bills are of every nature, be it recharge, postpaid, electricity bills, municipality bills, school fees, insurance, mutual funds. So we have a good in-depth and a good early mover advantage in this. And since we have already done aggressively moving in getting 500,000 agents in less than 3 months, so going ahead, our efforts will continue to dominate this space itself. Third thing what we have done is we have looked hospitality as a vertical, where instead of just giving payments, we are giving end-to-end solutions along with the payments. So platform plus payments, as Vishal explained earlier, is the core thing that we want to keep doing. So if you see the hospitality sector today, so it's quite fragmented in India, and globally if you see in the West, it is all under the franchise model. So you'll find a Best Western or a Super 8 model having thousands of hotels across US. But India, the franchising model works only at the 5-star plus top end. So 2-star, 3-star continue in their name. So that's why providing services platform plus PG, there's a huge scope that we have. So if you look at slide number 14, today in India alone, if you look in 2016, there are almost like 113,000 room nights a day. So if you annualize it, the potential is of around 4 crore, 14 lakhs room nights that are to be sold every day. And mind you, these are perishable commodities. You have to put the bums on the beds and fill up this inventory. So the hospitality guys, when we provide the platform, they look at, they want the transactions and they want the payments upfront. So that's why we have a good inroad over there. So it's a central reservation system that we have created for the hospitality sector, which gives them a real-time inventory management where they can distribute it to all the OTAs. They can distribute that inventory to all the GDS systems like Galileo, Sabre, WorldSpan, and through one single system they can turn it off if their hotel gets full. So it's a real-time system. The occupancy rate today is at 70%, but you can expect that it is going to go up to almost like 4.3 crore room nights by 2021. So the growth sector in the hospitality sector is going to be huge, and our solution is well entrenched to capture a significant portion in that this thing. Last, we say that we have invested in a company that looks into the remittance space. So on a global scale, if you see, it's a $586 billion remittance opportunity between countries, right? And more than half of that inward remittance, 260 billion flow into India, China, and Japan. India, China, and Philippines. India receives about $70 billion of remittance every year, inward remittance from abroad into India. So if you look 70 billion into, if you define it day-wise, so it's huge. And it's a 5% growing market in global remittances. The platform that we have built is a B2B and a B2C kind of a solution. So a Remit Online is the B2B part, where to it some of the top banks in India and in the region are using the remittance platform. So if you look at Kotak, if you look at Axis Bank, if you look at Yes Bank, many others are there in the region. Bharat Finance Banks and others in the region also have adopted this remittance platform where there is a transaction-based earning for the investee company that we have. Remit Guru is the B2C part that where it can do real-time remittances from UK, Australia into India. So that's the B2C venture. We are very gung-ho about this investment where we own more than a quarter of the company. And as far as financial performance is concerned, I will now hand it over to Mr. Hiren Pandya, who is the CFO. Hirenji?
Yes. Thank you very much, Vishwas bhai. Good afternoon, everybody. Infibeam Web Services delivered a strong performance in Q3 and achieved higher profitability due to rise in profitable transaction-related services which is being offered on the internet. Starting with slide number 18, as a part of company's long-term strategy of creating wealth of shareholders and Infibeam's consistent profitable track record, Board of Directors approved paying maiden dividend declaration. Board of Directors have recommended a maiden interim dividend of rupees 10 paisa per equity share, that is 10%, having face value of rupees 1 each. Infibeam is among the very few technology companies that has declared dividend. The e-commerce sector in India is still burdened with losses. Infibeam rather chose to be an e-commerce enabler that generates high operating margins and profitability. It is amply clear now that internet platforms are scalable and as such with scale can generate healthy margins also. Moving to slide 19, let me begin with providing the key financials and business highlights that Infibeam has attained in Q3. As you can see, consolidated revenue, EBITDA and PAT for Q3 FY18 have all more than doubled from last year. This was on account of strong performance in Infibeam Web Services, that is IWS segment, which comprises of platform and payments. IWS revenue was up 252% year over year and EBITDA was up by 162% year over year. Secondly, non-linear growth in revenue compared to cost, which has led to an increase in both EBITDA and PAT by 132% and 146% year over year respectively. Now if you see operational highlights, Infibeam business model is now fully geared towards transaction-related services. More the number of transactions, more is the opportunity to earn. On top of it, if the ticket size also increases, it further accelerates growth. Secondly, we processed 23.5 million successful transactions in this quarter. Though the transactions in Q3 were lower compared to Q2, we expect Q4 to be better than Q3 on account of various transaction-related services seeing more traction. As for example, Bill Avenue was launched only in late November, but we'll see more transactions from Q4 as we build our agent and biller network. Growth in CC Avenue payment gateway services on account of high usage of debit cards due to reduction in MDR, that is merchant discount rate, for merchants to zero for transaction up to rupees 2,000. Secondly, Fortune Online built for Adani Wilmar, which is also gaining more traction. Thirdly, digital payments services saw a healthy growth of 18% quarter over quarter in payment process on its platform. Our platform business has gained momentum due to our wide variety of verticalized payments, which is offering to travel and hospitality, telecom, events, membership, exclusive tie-ups in domestic and international markets, etc. And this is also growing adoption of digital payment trends in the country as a whole. Fourth, number of merchants have grown to nearly 88,000 plus, 88,993 very precisely, and has seen a fastest growth in the last 7 to 8 quarters. Infibeam Web Services added 6,855 merchants in this quarter, which is up by around 35% year over year. Fifth is Bill Avenue was launched in the later half of November. Now 52 agent institutions have been onboarded from a universe of approximately 180 agent institutions. About 3 lakh agents of about 500,000 that are onboarded are live and already processing transactions, that is bill payments. Many billers are live on BBPS through Bill Avenue, and several other billers in pipeline are at an advanced stage of integration on our platform. Lastly, the new GEM 3.0 launch on Republic Day, that is 26th of January this year, is running on an Infibeam platform. In all, 20 states, including 2 union territories, have signed MOU with the Center on GEM as of end of Q3FY18 from 15th as of end of Q2FY18. Infibeam's Board of Directors in its meeting held yesterday approved interim maiden dividend of 10%, which is driven by strong cash flow from operations. Board has also approved a proposal of Network 18's investment in company in the same meeting. CC Avenue merger with Infibeam is also approved by SEBI and CCI. Now we are awaiting the NCLT approval. Moving to slide 20. The scale of our service segment business has increased over the last many quarters as our focus towards transaction-led services has increased. This has helped Infibeam Web Services to record a revenue of 1,415 million, up 15% in Q3 versus Q2, compared to a growth of 9% in Q2 over Q1. This has resulted in achieving a segment result of 45%, 700 basis points above the 38% we achieved in Q2 FY18. We believe we can sustain these margins going forward as we build our scalable business, which Vishal Bhai has just discussed. We see a lot of opportunity in our existing business itself. Our product segment comprising of B2C marketplace saw a negative gross margin compared to positive gross margin we achieved in Q2. This quarter we saw a shift in the purchase mix towards the low margin products, which led a lower net realization. This can be attributed to strong buying in a branded category in the festive season that we experienced in Q2, which has significantly dipped in this quarter. Despite this headwinds in the marketplace, Infibeam managed to report the best ever EBITDA margin in its history of operations. Our EBITDA margins for Q3 were 22.7%. We believe that EBITDA margins going forward should increase as we scale our high margin web services operations by growing in international markets and expanding our logistics and .000 business, which we have not meaningfully monetized yet. Moving to slide number 21. This slide gives the year-over-year and quarter-over-quarter comparison of some of the key P&L numbers. As you can see that our revenue model has transitioned toward growing services revenue, which now contributes 66% of overall revenue. The contribution from this segment will increase further due to the pace of growth in this segment. We are particularly excited about the profitable growth. We will continue to keep a watch on our profitability even while we fast track our top line growth. This quarter, our PAT grew by 43% quarter on quarter and PAT margin was 44.4%, up 375 basis points compared to quarter 2. Moving to last slide, slide number 22. This slide provides a split between our web services segment and marketplace segment by revenue and margins. Service revenue and margins have shown a sharp growth and will continue to outperform as digital adoption and e-commerce keeps growing. The service segment comprising subscription and transaction revenue model continued to register a very strong growth, mainly due to large number of transactions which are flowing through digital platforms generating high transaction revenue. Infibeam business model is transaction oriented, built on the internet, which is very scalable. The company's transaction based growth drivers are government contracts, large brands and retailers, marketplace and payment platforms. Infibeam service revenue from transaction-led services accounted for majority of total Infibeam Web Services revenue, marking our shift towards growing this revenue as it is scalable. The company constantly offers innovative and more value-added services to the merchant to increase revenue per merchant, ensuring growth with profitability from each merchant account. As a part of merchant acquisition strategy, company efficiently manages the cost without incurring higher operating expenditure. The low-cost operation model is resulting into higher EBITDA, making it one of the most profitable technology-based digital marketplace service providers across the world. The company's successful inroads into the international market through prestigious association with companies and by offering digital services. As a part of international expansion strategy, the company has entered into agreement with some of the largest channel partners, that is aggregators, to establish its business in potential geographies like Middle East and Europe. Company constantly strives to improve and innovate its digital services and deepen technology capabilities to offer the best experience to merchants both in India and in international markets. Company's focus will remain to grow the transaction-based revenue stream by providing more innovative digital solutions to brand and retailers, thereby increasing revenue per merchant. Marketplace top line and margins have both suffered a Q3 for reasons I already mentioned sometimes back. We will work towards keeping this segment contribution positively. Now I hand over to Vishal Bhai.
Thanks, Hiren. Finally, I want to walk everyone through the new business opportunities that the company is going to undertake in this quarter. To summarize, our business is built on platforms and payments. When you actually combine platforms and payments, you create an opportunity for a transaction to get closed. It is very important to note that we provide an amazing opportunity for usage-based commerce, whether you talk about a vertical like a hotel, or whether you talk about a vertical which is a retail, or you think about travel, entertainment, or education, that anyone and everyone can build an opportunity and a presence for themselves under their own URL. Now I repeat that word, under their own brand and under their own URL. You see, because when you already have a presence and an understanding and a base that the usage that you have currently, which is in the physical format, that has a potential of going online, there is no reason for anyone to think about it as an either or. That, let me just sell across the marketplace. You could have your own as well as sell across. And if you are able to provide a framework and a solution that allows a merchant across any of the verticals to do both of them and make it variable as an opportunity, it becomes an amazing opportunity for the company to build up upon. So in terms of the new business development, I want to cover what we will be doing in the subsequent quarter. We are going to focus this year a lot on building up our .OOO, which is the root of the internet, that domain as well as the infrastructure along with it, that business. You see, I want to spend a couple of minutes explaining what we will do so that it will give you a perspective of how each of our pieces fit together. In the past, we had platform and payments, and we verticalized that solution for every industry and make sure that that industry becomes an opportunity for us to scale up upon. Now, in the whole domain industry, we find that internet is equal to .com. Our internal thesis is that if you have a .com available, that any consumer or any merchant will prefer a .com. But now, recently, it is not possible to get the URL that you would want. And so, rather than thinking of it as just a domain business, we see an amazing opportunity to not just offer a domain, because a lot of domains you would purchase and you will not do anything with it. That is there a possibility to offer that domain along with an infrastructure framework? So what I mean by that is that we can light it up along with securitization for anyone and everyone to build up their own setup. And you see, if the marginal cost of building up is very, very low, then the opportunity of being able to scale up against an incumbent, which is a .com, can be very large. I think for a country like India, which is just getting on to, and I think it's still very early days of the internet. So while internet as an industry has scaled up, I personally think it is still very early days where there is a huge potential for a lot more to happen in the subsequent years. That we believe giving an opportunity to be able to scale up along with the platform, not just in India but globally, is a very large opportunity for the company. And then if you also offer a payment framework along with that for customers of the merchant to transact upon, it becomes a one-stop shop for someone to be able to build up upon. So to give you a size and scale of the opportunity, there are 300 odd million domain names registered across the world. And we have already integrated across more than 100 registrars across the world. So since we are the brand, we will work through a registrar, and a registrar could be somebody like a Big Rock or somebody like a GoDaddy, who you would go to be able to purchase a domain. And we would have created an opportunity to price those across all registrars. In the past, we had discussed on the call that we are very interested in building up on this opportunity and that we were working on reducing the cost. It's taken us longer than we thought earlier. We were of the opinion that we would be able to launch. There is a lot of regulatory approval process which is required. We are very happy to report that all regulations and regulatory approvals have come through. Our pipes into all the registrars have also been built out. And starting late March, we will be able to roll it out. It's been late, but we believe the opportunity and to be able to monetize on that is significantly larger. More importantly, the advertising platform that we are building out and the one that we will essentially deploy will also be monetizable across all these opportunities. So this is an additional revenue stream that the company will generate, where we have already expensed out all our development and all our costs. Moving on to page 26, I want to give you an update of the data center as well as our interest in building out last mile logistics. As far as the compute capacity is concerned, this is the framework that we are building out to be able to give the entire framework hosting solutions for all different opportunities that we are targeting as a platform. We are very happy to report that the progress is going very well, and by end of this calendar year, that we will make the facility functional. This allows us to give out more infrastructure services to our merchants in a very securitized and scalable way. It's a tier 3 opportunity, tier 3 center, which has a certain amount of uptime, which means that the availability as well as virtualization will allow us to scale our platform business on top of this opportunity. As far as the last mile logistics is concerned, while we have not made a lot of progress in building it up. You see, with the introduction of GST, there is huge amounts of changes that have happened all across the supply chain. We will take this opportunity up this year. To give you some reference, we have a product, a software product that we have built out, which we give to many companies to utilize. We do not monetize on that at the moment at all. It is provided to certain companies so that they are able to offer a courier opportunity to businesses. But the businesses that utilize these have scaled up significantly. So while today we do not have a monetization, the moment we build out logistics as a framework, that it becomes an opportunity for us to monetize upon. This is an opportunity that we will work upon in the subsequent quarters. The one we believe will actually drive additional consumption. It will be the biggest opportunity for our web services business, where we not only offer merchants an opportunity to get a domain, to be able to register and build out a framework, to accept payments, but also to deliver products and services. Finally, I want to touch upon the announcement that we made recently about Network 18 investments into Infibeam. Network 18 Group will be making a strategic investment in our company, and through this tie-up, we plan to integrate multiple platforms and assets to build out a very large customer base with a very differentiated offering. And this partnership will strengthen our positions in many of our platform businesses. Several mutual cooperation strategies will be explored in the due course of these partnerships, specifically in the digital space. As you know, as a reference point, Network 18 holds many media and entertainment assets and many strong media brands as well, which becomes an opportunity for us to be able to monetize upon. At this point, I think I'm at the end of the presentation, and we'll open it up to question and answers.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have a first question from the line of Piyush Sakhya from Raisonier Capital. Please go ahead.
Good afternoon, Mr. Mehta and team. I'm very, very happy with the kind of performance that you guys have done. And I am kind of in awe of the business model that you guys have adopted. What my question is that, it's something that has not appeared in your presentation and has not been a priority for you guys, is the Odigma piece that you guys had acquired a few years ago. Of what I understand, the digital advertising space, it is almost a captive kind of a publisher pool that you guys have, which can be monetized by just bringing in the demand for the advertisements. I'd like to know how and when do you guys plan to take that up?
Thanks, Piyush. I think it's a great question, and I'll attempt to give you some thesis around that we have. So in the digital space, you're right. There is an advertiser and then there is a publisher. And we own a lot of publishers on our platform. Publisher is where the ad gets published. And if you look at historically, this entire space has been dominated by very large search engines. And while we also have publishers, you're right, we have a lot of advertisers as well. So building out an opportunity that allows us to scale on top of our framework becomes a very attractive one for us to build upon. You see, in that, we believe that if we build out a business which is going to service a client more like a media servicing agency, it may generate profits for us, but it will be very hard to scale. So being able to build out a technology framework that allows a publisher to publish ads and earn money, and to be able to allow an advertiser to be able to target users across publishing assets becomes a very, very important and relevant opportunity for us. Our understanding of e-commerce as an opportunity, and with Odigma's understanding as well in terms of being able to drive conversions, will only help in terms of making this opportunity more pervasive. So in other words, we have to build out a very interesting, analytical, intelligent framework that allows us to monetize on top of publishers and advertisers that we hold. The second part is that at scale, it becomes even more important and interesting. We believe we are getting to that scale. When we are talking about billions of page views, then the opportunity to monetize becomes very large. So if you recollect, we are spending on building out the advertising framework. We're at a point where we will be deploying it when we talk about the .OOO opportunity, and the one that we will be focusing on, that we will also deploy our ad framework along with that allows us to monetize, and that also allows merchants to be able to accept digital ads using our framework. So while we have a thesis on that in terms of how we will like to proceed, and we've made a lot of progress, we have not launched it yet, and you can expect that in the first quarter of next year, we will be launching it.
Thank you.
Thank you, sir. Do you have any further questions, Mr. Piyush?
I'm good with that. Thanks.
Thank you, sir. Anyone who wishes to ask a question may press star followed by 1 on your touchtone phone. We have a next question from the line of Pranav Kshatriya from Edelweiss. Please go ahead.
Hi, thanks for the opportunity. I have two questions. Firstly, on this Network 18 deal, you talked about integrating multiple platform of Network 18 group. I just, if you can help us with, some example, how exactly this you are planning to do, that will be helpful. And my second question is on the last mile logistics, what you talked about. What should be, the things which we should be watching in terms of the progress of this business and how it is headed. So these are my two questions.
Sure. Yeah, I'll take them. So as far as the second question regarding last mile logistics, you see there are three basic verticals within last mile logistics that we identified. One is the first mile, which is where you pick up the product. Second is the warehousing and the fast forwarding of that inventory to the location. And the third is the last mile. And if you look at the cost structure in the logistics industry, what we evaluated, we think that the last mile is the largest opportunity to be able to go after for a company like us. Because you see, we already know the demand, and we sit on top of a lot of merchants who have demand on their framework. And so to be able to offer last mile opportunity for merchants, it becomes an opportunity to be able to monetize upon. Now within the last mile, there is a very interesting dynamics that we noticed, which is that everyone is building a very human capital intensive network, a network where you would employ thousands of people, and most of these are actually on a third party roster to be able to manage risk. So finally, what we realized was that you are connecting a demand that the merchant has to a company that has humans or people who can deliver the product. and that smartphones are very pervasive. Every logistics delivery agent will have a smartphone with them. So what we did was we developed first a software framework, which we call ShipDroid, to be able to allow agents to deliver the product and for a merchant to be able to give demand and establish that entire pipe. And about a couple of years back, we went in the process of being able to offer and approach many of the courier companies to be able to utilize our software. What we realized very quickly on was that nobody would pay us to use logistics software. And as a result, we started giving it out to a few companies who wanted to get into the courier business. Think of them as startups. And in that, we realized that, it is a very interesting dynamics to be able to drive a business which is more around subscription with merchants, which means that you take a minimum commitment to deliver so many from a merchant, and then you also provide a forward commitment to companies that have humans, which is they provide to the many courier industries. It's not about giving it to a courier, but it's giving it to a company that has agents. And in that, we realized that the largest company using our framework is capable of delivering 1 million packages a month. Now, mind you, we don't monetize on this framework at all today. But short of going and saying that there is a pipe to be established for merchants that have demand to companies that have humans, there is an amazing opportunity to be able to deliver and make money out of every single unit that passes through your system. So this year, since GST has been implemented, that we would also establish locations that allow cross-delivery and offer it to these companies that are already utilizing our framework that we do not monetize on today. And if we are able to do that successfully, then earning small rupees out of every delivery will mean a very significant opportunity for the company. We will not go into a capex intensive logistics business. You see, last mile delivery has not just delivery but also payments attached to it. And what I mean by payments is cash on delivery. And if we are able to get that to scale, then we have a potential of building out a framework which is in logistics where it becomes sticky for companies who utilize our software, as well as making them more efficient to be able to utilize our locations as a last mile delivery center. So our monetization opportunity would be based on delivery of every unit. And that is the program and an opportunity that we will take up in this year. To your question about Network 18, you see, Network 18 has many assets. And when I talk about the digital assets, this first post money control, huge number of page views, lot of appetite to be able to monetize upon. They also have a reach to so many users. And to be able to provide our platform to such digital assets, as well as take advantage and take an opportunity to build out on our base, on the reach, will be the opportunity to focus on. So while the contours of the deals are being worked upon, when we have an update, we will update you on due course.
Thank you for the detailed response. I have a follow-up question. Will there be any board seat given to the Network 18? Secondly, you talked about this GEM project. Can you quantify what sort of revenue the even indicative number range will suffice was booked for this quarter?
Sure. So regarding the first question around the board seat, all material disclosures have been made. There is no board seat to Network 18. To your second question around government e-marketplace, you see, as far as the third quarter is concerned, if you look at the value of transactions, there is a payout that comes to the consortium, and from that, our revenue is booked on what we get in terms of the overall pie. It's reasonable to assume that our payout will be in single-digit basis points. So if the transaction value, and it's already, most of it is anyways provided for online, that, if it is a few thousand crores, that Infibeam's payout will be a single-digit basis points out of that few thousand crores for the last quarter.
Okay. Thank you very much. That's it from my side.
Thank you.
Thank you, sir. We have a next question from the line of Dhawan Shah from Q3FY18 Shares and Securities Private Limited. So please go ahead.
Congratulations for the great set of numbers, sir. So a few questions. Firstly, can you please break up the revenues between CC Avenue and Builder Bazaar into the services segment for this quarter?
Sure, Dhawan. So, you know that payments as in general from CC Avenue, we have about close to shy of 60 crores out of the CC Avenue business from Q3. So the remainder is from the platform. You will appreciate that now we are building out our framework in such a way that payments and platforms is coming together, which means that we typically offer a solution which allows us to monetize out of payments. And that is the role and that is the path that we have undertaken, because that makes our platform as well as payments business very sticky. But to answer your question, for the last quarter, the avenues business contributed to less than 60 crores of the overall services revenue.
Okay. And if I look at, the segmental EBIT margins for services, it's been improved to 40%, so around 700 basis point improvement over the last quarter. So can you please quantify it? I mean, is there any improvement in the CC Avenue's EBIT margin during this quarter, or how's this operational performance moved out for this quarter?
Sure. So, you see, in a platform business, maybe I should tell you a little bit about our thesis of how we look at this. When we actually build out a platform, our incremental cost is typically very, very small. And so as more and more, for example, when we think about payments, once it is established that when the same customer does well, then our payout from that customer or that merchant keeps on increasing. So if you look at, avenues, in Q3, the overall processing value or transaction processing volume grew to 5,400 crores in the previous quarter. And in Q2, as a reminder, it was 4,500 crores. So there is close to about 1,000 crores more that was processed. And as processing volume in this business grows, and if you are able to make it very sticky with the platform solution, then it will have a direct impact in terms of the margins, if you will. The same thing happens in terms of, when we actually migrate our business model from more transaction-based versus subscription-based. So as our transaction-based volume keeps on increasing, because in every transaction we will get some revenues out of it, that you would see some non-linearity. And that was, primarily the reason why you will see expansion in our EBITDA margins.
Okay. So can we assume the same kind of EBITDA margins like this 40% in the coming quarters as well?
I think it's reasonable to assume, since we keep on working on verticalized opportunities that allow us to focus on different industries. So to give you an example, Bill Avenue was one of them. And in Bill Avenue, we said utility payments, we don't monetize, we don't make a single penny so far. But let us go after utility payments because you are talking about an industry which is very, very recurring payment framework and goes into lakhs of crores. So if we are able to target, and we have not even scrapped the surface of this, that if we are able to target, then we will keep on investing into these opportunities. So marginally, you may see our EBITDA to be slightly compressed. But again, like I said, that when we launch that service, that you will again see that the EBITDA will grow up. So in the long term, it's reasonable to assume that EBITDA will be in this range.
Got it. Now, if I look at, the product business, the capital employed for this quarter has been increased by around 20 crore. And the EBIT loss has been widened for the product business. So I understand that maybe this Q3 is festive season, and that's why maybe the capital employed was higher during this quarter. So how was the scenario in the product business in terms of the sales and the operational performance? So can you please explain about this thing?
Sure. So in the product business, we've consciously made an effort, and our thesis continues to be the same, that we think consumption or consumer is a very important opportunity to monetize upon. You see, in our usage-based platforms that I talked to you about in payments, that we've got a very strong hold on it. Okay, but as far as the consumer is concerned, you see that very, very large marketplaces are out there who have taken a lead on that, and they continuously keep on investing and reporting losses. So that thesis we have decided we will never take. We want to actually grow a business which allows us to monetize on the consumer. Now, in that, what we have done is in Q3, of course, because of the festival season, that many of the branded products, which become the head as well, were essentially getting run through our system. And in overall, if you think about the product mix, again, that we had a mix which and the returns that come along with that, even for the product tail, because when the consumption happens, there is also a return that comes along with it, that resulted in compression in margins for us. But we believe that, in the long term, we will continuously operate, and we have a thesis on building out a profitable enterprise focused on certain specific verticals, which allow us to continuously grow. And this opportunity of building up logistics will further improve the margins on the product deal.
Okay. And because of this increase in the capital employed, maybe was that invested through our internal accrual, or have we raised any debt? Because if I look at the standalone statement, the interest cost has been increased by around 8 million rupees. So just wanted some clarification on that point.
Mainly through accruals.
Okay.
So you can assume that it's mainly from accruals, Maya.
Okay. Got it, sir. Yeah. That's all from my side. Thank you.
Thank you, sir. We have next question from the line of Pritesh Thakkar from KR Shares and Securities Private Limited. Please go ahead.
Yes, sir. Congratulations for the strong set of numbers. So I have a question on CC revenue. The value of transactions from CC revenue has increased by 18%, but the number of transactions that has declined during the same quarter by 11%. So could you please throw some more light on this variation? And secondly, which mode of payment has contributed the most to the increase in value?
Sure. So Vishwas will take that question.
Yes, this is Vishwas here. So the number of transactions vary from merchant to merchant, right? So if you see in last quarter, another before that, there's a seasonality to it. So there was mobile recharge was one of the main categories that was happening based on cashbacks and others, because all the major recharge companies, be it Freecharge, Paytm, MobiKwik, or Airtel, where the number of transactions are high, but the ticket size is relatively low, around 80 to 90 rupees per recharge transactions. So those were doing very well in the last quarter, but this quarter, number of transactions in the recharge category have gone down. But overall, on the other merchant side, be it travel and other part, because of the seasonality of vacation in Q3, that's why the average ticket size and amounts have increased. So its seasonality depends on merchant to merchant. So we typically track, because we make money on the amount transacted. So that has been a good, healthy 18% growth on that one. It is.
Okay. And secondly, which mode of payment has contributed the most to the increase in value of transactions?
So it's merchant to merchant dependent. It's credit card, debit card, net banking are almost equal right now, and there are wallets, and then there are UPI, and there are no fixed percentage that this amount comes on from this particular card. So if there's an offer-driven wallet kind of this thing, then the transactions on wallet go up. So it's different models, different. We have 200 plus payment options. So very difficult to categorize on percentage basis on this one.
Right. And do we expect the ticket size to increase over the period going forward?
Ticket size to increase, we look at a little different way. We look at the amount processed, and yes, definitely, as new merchants keep adding on, as we are adding 100 plus merchants every day, and as the volumes increases and as the new categories and other things also that we have taken up on bill payments, on travel, utilities, and other verticals. So definitely the amount processed, there's a continuous growth if you see over the last 3 quarters, and we expect the growth momentum to continue.
Okay. Thanks a lot, sir. That's it from my side.
Welcome.
Thank you, sir. We have next question from the line of Mitul Shah, individual investor.
Good evening, sir. Very nice set of numbers, but I have 3 questions. First question is, why CC Avenue's profit have come at 8.2 CR? When last time we have talked about CC Avenue, you have told us that full year profitability of CC Avenue is 20 CR approximate. So am I missing something that on the 9-month basis it's coming at 8.2 CR? So something is not adding up. So what am I missing here?
So Mitul, I'll answer that question. I think the numbers are maybe we'll have to look, correct these numbers. So 9-month profitability is way north of 8.2 CR. That's first. So what we can do is provide you specifics on that opportunity. I think it may be quarterly number that you may be referring to. So overall, I think the profitability is healthy in CC Avenue. The second is that you see we've also built out many platforms to be able to attach platform and payments together. And one in specific that we referred to in our presentation was Bill Avenue. So when you actually invest, it's fully baked and expensed. And so within the quarter, you may find that as we build out different verticals to attach software and payments together, because it's no longer a pipe, it's a very intelligent pipe with analytics. Every information about user experience, users, and to be able to close a transaction, that you will find that there may be a slight compression in that. But overall, we've seen that it's been very healthy. And, we believe that with this introduction of zero MDR on debit cards, that we should keep on seeing better progress going forward.
So what is the profitability that you are expecting this year, this full year, for CC Avenue particularly?
See, we do not, provide forward-looking statements as a policy. But what I can tell you is that, profitability is way north of what we had seen last year, in spite of building out, the platforms which allow us to go and cater to specific industry verticals, like Bill Avenue.
Okay.
So I think that we see healthy growth. You see, we have focused, as a company on building out a long-term opportunity for us. And in that, we believe that, when you have the core platform and payments framework established, then being able to go after verticals, and by verticals I mean certain industry verticals, for example, travel being a vertical, or hotels being a vertical, or retail being a vertical. So if you go after that, and within those verticals also, if you focus on usage-based verticals, as in usage-based clients and not discovery-based clients. You see, for a client who's producing something which nobody knows of, they are better off perhaps going to a Google to go and have their product discovered, right? But for those people who have a consumption-based framework anyways, that can be bring them and provide a convenience to them, I think those are the ones that we believe are the ones to go after. And we have done that very successfully, and that's what we'll continue building up upon.
And so that way, was just for this 9-month numbers, what was the CC Avenue's profit actually? That you can disclose, no? Because it's already out in exchange.
Yes. So it's about close to 20 odd crores.
Okay, so that was my point, because already the number of transactions were much higher than the last year when it was not showing in the non-controlling interest. That's why I asked this. So it's more than 20 CR.
Correct. That's right.
Okay. The second thing, so are we going to launch O domain this time? Because you have said from this quite some time. So what will be the course of actions from your side? What will be the pricing strategy, and how you are going to campaign this, and how you will reach to the each domain providers or the software makers?
Sure. So you see, there is a very clear distribution channel in the domain industry, which means that we are the registry, and we would sell it through registrars. Registrars, you can think of the common name of GoDaddy as a registrar, and registrars go to the end user. So the way it works is that we would price to the registrar, and registrar will price to the end user. Okay.
Okay.
Registrar can also work through resellers. Now, you can imagine that since there are already 300 million odd domains already out there worldwide, that this distribution channel is very, very well established and thick. So the first thing that we would need to do is to actually communicate and establish the pipes with every registrars.
Yes.
The second part that we have completed and closed. The second part is...
They'll ask for the pricing. The pricing is the most important thing. So how is it going to be the pricing? It's like .com you can get from 150 to depending upon the $300. So are we competent enough that we can compete with .com or .co.in?
Yeah, so I'll give you our thesis. Our thesis is that yes, if we are going to be thinking about mass scale, and if we wanted to be positioned as one of the leading, top-level domain provider, then we will of course require to be very competitive in the markets, and competitive not in terms of price alone. Price is the most important element, of course, but just the entire offering as well. So to answer your question, the answer is yes, that we would want to actually compete to be able to provide. See, the good thing, like you said, is that for .com or .co.in, there are a lot of domains which are not available, which have already been taken. So we will have a differential pricing for different domains. It will not be a consistent single pricing for every domain. And number two, that it is a opportunity that we would of course need to provide. You're right that we have been delayed on this. You see, there are too many regulatory approvals. It's a very regulated business, and our expectation was that we will do it much faster and that we would get the permissions. But like I said, we are very happy that we have received all the permissions. We have established all the pipes within each of these, and it will also mean that we will be migrating all the existing, account holders to the framework that we are getting into. So, you can expect that, in the first quarter, you will see significant movement and activities around this opportunity.
So, when are you going to launch this exactly?
We don't have a launch date yet that I can disclose as of today, but it's reasonable to assume that it will be in the first half of next quarter. So, in fact, in the month of April, we believe that it will be a good expectation to take.
And what is your target thing? Like how much revenue you are going to get from this?
See, again, it becomes a function. The first initial few quarters, we are going to focus more on the usage. While there will be, of course, revenue targets, but we believe that in a framework that we would launch, in the past, we could have a business which is profitable, but if it doesn't scale for us, then internally we think that it may not be the right business to have in our portfolio. So we've always focused on businesses, while it may appear that, it will make money, but if we are more focused on the scale of it and not just, the pure profits that we generate out of it. So to answer your question, I think that it will be a function of pricing and usage. Our initial focus will be on numbers and usage. And to achieve that, we will come up with, an opportunity of an offering. And I refer to the offering and not just pricing, because that will be the one which will drive usage in our opinion. So those are the ones that we will take up and we will grow on top of.
And my last question is, there are three parts of it. First, what was the revenue breakup for this time? How much it has come from the ILFS, what you have talked about? How much has come out from the education software that you have done 2 quarters back that you have done the announcement? How much has come from the international business and how much has come from the GEM? That I wanted to know.
Yeah. So as far as GEM is concerned, of course, we've talked about this, earlier. That the stats. We don't report the revenues we generate on each vertical and customer.
So just for my understanding, if you do 1 lakh rupees transaction for GEM, how much we actually earn?
That's a great question. So it's like I said, we would not be able to comment specifically on every customer, but what I can.
In general, I'm asking. It's okay. You don't need to go specific, but what's an average if I spend only 1 lakh rupees on the GEM platform through yours? How much Infibeam earns out of it?
Sure. So like I said, it's reasonable to assume that our revenues will be in single-digit basis points.
So it will be like 800 to 1,000?
It will be in single-digit basis points. So like I said that, you would have to work the math out for this.
Okay.
It's reasonable to assume it will be in single-digit basis points. So that's as far as, the GEM opportunity is concerned. We think like I said, the scope is much larger because, the overall size of what the procurement is extremely large. And, while it may not have contributed a very, very large number to our revenues for last quarter, but that is an additional opportunity for us to monetize upon. So as a company, we've decided that, as far as the Digital India initiatives and so on and so forth is concerned, and when you talk about ILNFS and others, we think that, from a prioritization perspective, that, programs which are of this scale and size, are the ones to prioritize. And the ones to actually go and monetize on top of, because
but for the ILFS, when last time we have discussed, you said it's an 1,250 crore opportunity at minimum, and over a period of 5 years. And this is about last year, I'm saying. So this quarter, on the 3rd or 4th quarter, the revenue will start kicking in for at least 50 to 100. That was our last communication. So that's why I'm asking that is there anything has happened on that front, or there is nothing has happened, and it was just an announcement. That is my plain question.
So yeah, we've to answer your question, yes, we've made progress on many of the fronts. From a scale and opportunity perspective, that opportunity still exists for us. I think from a internal prioritization perspective, we have taken up programs that allow us to, because it's about making sure that what rolls out, and from a rollout perspective, we have taken up certain programs. As you can appreciate that the size and scale of each of these programs are significantly large.
Yes.
As a result, we have taken that up. We are slow compared to our expectations on certain programs. But overall, like I said, we are prioritizing the ones that allow us to create a game changer opportunity for the company and shareholders. Like I said, it'd be very hard to discuss specific client, and we've.
No, and last question. So how much revenue has come from the international business?
International business is about in the teens, so it continues to be that way. Okay.
Okay. So, and what is the progress on how expansion on international business?
We think international is a very, very large opportunity for us. The important part is that we've gone after aggregators. Aggregators are the one who provide to end users. A case in point being telco will be an aggregator.
Okay.
And with that, it becomes an opportunity for us to go into each geographies.
Okay.
With the rollout of the .000 framework globally, that we think that